So, have you ever looked at the financial world lately and just thought, what is going on? Why does everything feel so much more chaotic, so much more unstable? Well, today we're going to dig into a really fascinating white paper called The Volatility Decade. It's all about understanding these deep structural shifts that are basically cracking the very frames of our financial system. Let's get right into it. Okay, picture this. It's September 2022. The UK government rolls out a new budget. I mean, that's pretty standard stuff, right? Happens all the time. But the market's reaction? Oh, it was anything but standard. We're talking about an event so violent, so fast, that it came dangerously close to wiping out the country's entire pension system in less than a week. And right there, that's the central mystery we're unpacking. See, the budget itself wasn't really the story. The environment it landed in was. So you have to ask, why did a policy announcement that should have barely made a ripple instead create a full-blown tidal wave? What on earth has fundamentally changed in our financial system to make it so fragile? Just look at this contrast. It's pretty stark. A decade ago, a policy like that would have barely registered. You'd get a few grumpy articles, maybe a tiny little move in the bond market, and that's it. But in 2022, it was a violent reaction that required a massive emergency intervention just to stop a complete meltdown. The system itself has become incredibly sensitive, like a tinderbox, waiting for a spark. The authors of the white paper, they have a really interesting way of explaining this. They call it the containment frame. Think of it like an invisible box. And this box is made up of all the things that used to keep the system stable. Things like central bank credibility, a government's power to spend in a crisis, and just stable, predictable market relationships. For 30 years, this box was strong enough to contain any shocks. But the problem is, now it's starting to crack. All right, so let's start examining those cracks. The first major one in that frame is something we can all feel, the erosion of credibility. And this is all about the trust, or lack thereof, that we place in the big institutions that are supposed to keep everything stable. We're talking central banks, governments, the whole lot. And honestly, the signs are everywhere you look. Remember when central banks kept telling us for months that inflation was just transitory, only to suddenly slam on the brakes and hike rates at the fastest pace in decades? Yeah, that really damaged trust. Since then, they've pretty much abandoned clear promises about what they'll do next. And on top of that, we've even seen the credit ratings for major, supposedly stable countries get downgraded. The hits just keep on coming. And look, this isn't just a feeling we have. The data is pretty stark. Before 2020, we had really clear guidance from the Fed on interest rates. You kind of knew what was coming. Now, it's a total guessing game from one meeting to the next. And those long-term inflation expectations, which used to be rock solid, they've drifted way higher. What this all shows is that the market just doesn't give these institutions the benefit of the doubt anymore. Okay, let's move on to the next crack, because this really builds on the first one. It's not just about trust, it's also about firepower, the actual tools that governments and central banks use to fight a crisis. Spending money, cutting interest rates. Well, that toolbox is starting to look pretty empty. And this chart just illustrates the problem perfectly. I mean, just look at the staggering rise in government debt across all the major economies. After fighting the huge 2008 financial crisis and then the global pandemic, governments simply don't have the same capacity to step in and save the day again. The piggy bank is basically running on fumes. So, what's the real-world consequence of all this debt? It's huge. In the US right now, the interest payments on the national debt eat up as much of the economy as the entire defense budget. Think about that. That's an enormous amount of money that can't be used for anything else, and that includes fighting the next crisis whenever it comes. All right, this next crack is a really big one, especially for anyone who has a retirement account or any investments. For decades, the golden rule of investing was simple. When your stocks went down, your safe government bonds would go up and cushion the fall. Well, that relationship is now officially broken. And here's why. In the past, most crises were about weak demand. People weren't spending enough, so central banks would just cut interest rates, and that would make bonds rally. Easy. But now, the shocks we're facing are about inflation and supply chain problems. And to fight that, central banks have to do the opposite. They have to raise rates, which causes both stocks and bonds to fall at the same time. Suddenly, your hedge isn't a hedge anymore. It's an anchor, pulling your whole portfolio down with. For over 20 years, this number, this negative correlation, was the absolute bedrock of safe investing. It was this simple, reliable promise that your bonds would zig when your stocks zagged, protecting your portfolio. I mean, the entire foundation of diversification was built on this one idea. And now, look at this. The relationship hasn't just gotten weaker, it has completely inverted. It's now strongly positive. I'm telling you, this one number flipping from negative to positive is probably the single most important structural shift in finance in a generation. The old playbook isn't just a little outdated, it's completely fundamentally broken. So the final dimension we're going to look at is how a whole bunch of other smaller weaknesses are all combining to make the entire system more brittle, more prone to just suddenly breaking. It's not one single thing. It's everything happening all at once. So you've got these markets that seem really deep, but can suddenly have these air pockets where, poof, no one is willing to buy. You've got geopolitical tensions creating these constant supply shocks out of nowhere. You have almost everyone's money being herded into the same tiny handful of giant tech stocks. And to top it all off, crises, like the collapse of Silicon Valley Bank, now unfold in a matter of hours, not days. That's way faster than regulators can even get into a room to figure out what to do. This chart just shows that hidden fragility perfectly. Get this, a third of the entire S&P 500's value is now tied up in just 10 companies. That's the highest level of concentration we've seen in 50 years. It means that what you think is a nice, diversified investment is actually a massive, concentrated bet on a handful of tech giants. If they sneeze, the whole market catches a cold. So when you put all of these cracks together, you've got the eroding credibility, the empty policy toolbox, the broken stock-bound relationship, and all these compounding fragilities. The conclusion is pretty much inescapable. The containment frame is breaking, and the financial rulebook we've all been using for the last 30 years, it's basically useless now. And this is how it all happens. The great irony here is that it's the long periods of calm and stability that actually make us complacent. We start to take on more and more risk because we believe the system is safe. All the while, the frames are weakening quietly in the background, out of sight. And then, one small, seemingly minor event, like that UK mini-budget, hits a hidden weak spot, and the whole thing just cascades into a massive, systemic crisis. You know, the core thesis of this entire analysis really boils down to one stark statement. We are not in some temporary downturn or a normal cyclical blip. The fundamental regime of how markets operate, that has changed. And that leaves us with the final, really critical question. For 30 decades, these invisible frames were there, absorbing the shocks and protecting our portfolios. Now that they are so visibly cracking, it really forces us to ask ourselves, are any of us truly prepared for what's coming next?